My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. A lot to cover. We're now into earnings season. We'll be discussing the Delta earnings and JP Morgan earnings. We also got CPI data out this morning, and this was an interesting one, folks. So again, contrary to what a lot of us believe, maybe we don't believe these numbers, but basically we saw inline headline numbers on CPI, 0.3% month over month. 2.7% year over year. The kicker here was core, which is minus food and energy, came in slightly better than expected at 0.2% versus 0.3% month over month and 2.6% versus 2.7% year over year. Now, again, for me, I look at what's going on out there. Copper at all-time highs, silver at all-time highs. All of these input costs out there that are just surging. Memory storage. I had a friend of mine who posted up on social media how a few months ago he bought some memory online for about, I think it was about $270 for multiple terabytes, right? And now that's over $1,000. So there's absolutely inflation, but remember the CPI is a basket of goods that they're taking. Now, again, whether they're fudging the numbers, none of us really know. Frankly, it doesn't matter. But I do think it's important to recognize that there's absolutely some massive inflation going on. And I do wonder if we're going to see inflation upticking in the next year or so based on copper, based on all of these other commodities, including oil, by the way, that I said was breaking out or would break out, and it absolutely has started to break out. So CPI data came in today. Markets generally rejoicing over it. You can see right here, nice initial spike on the S&P futures. We've backed off a little bit here overall. But again, I've been kind of speculating with you guys that they want to get the S&P to 7,000 and the Dow to 50,000. Will this be the trigger to touch those major epic even numbers? In which case, once we hit some of these major levels, then we may start seeing that pullback. And where's that pullback going to come from? Honestly, I think it could be the bond vigilantes. There's some major stuff going on here, folks. This is my one kind of wild card potential for a black swan event in 2026 is we're looking at a 10-year yield that's borderline breaking out, might even be breaking out today. We'll check in on that. We now have the 10-year yield in Japan continuing to skyrocket. All of these things are going to raise the risk level for a market that is insanely complacent. But let's start out with the S&P 500 here. What do we have on the charts? We basically have a chart here of the S&P. This is your daily S&P chart. And again, you can see we're getting squeezed between this trend line going back to the April 2025 lows and this bigger parallel that has marked every major high and every major low, therefore, since COVID's low in 2020. Now, again, notice how tight it's getting. Basically, we are going to see a market breakout or breakdown probably within the next week or so, if nothing less, by the end of January. So we're going to have a resolution to this chart here, one way or the other. Which way will it be? Let the charts tell us. Let's watch and find out. But keep an eye on this. Remember, this yellow trend line up here is around 7,025 right now. So that would be a pierce of 7,000 on the S&P. Will we tag that today? I don't know, but we're only about 50 points away at this point in time, and that will be something I watch like a hawk. Taking a look at the Dow Jones is bubbling up against this long-term trend line right up here. I think we touch 50K. That pierces this orange line. Then I wait to see what happens to the markets at that point. And same thing on the Russell 2000, which again, this is a wide swath of different companies. The Dow is more the safe haven names. The S&P is more a broad-based inclusive of technology. And the Russell is more regional banks and small caps. They're all up against a major pivot line or trend line here. So we'll see how this goes. Now, again, for me, based on this, I'm keeping a very close eye on the 10-year yield. The 10-year yield ahead of CPI was inching above the line again. It did get pushed down. I think the bond vigilantes and the smart money in the bond market, they know that the inflation is coming back. I think that's part of the issue here, is that ultimately they know that the Fed independence is slowly waning. Regardless of what you think about the Fed, it makes the overall view of the financial system in the U.S. less stable. That means investors that are buying bonds, U.S. treasuries, for instance, are going to demand higher interest rates to buy those. That means up on the long end in the very least. The Fed may control the short end. They don't control the long end of the curve. Let's remember that. All right, so we go back to the charts here, and we can clearly see what we refer to in technical analysis as a bull flag consolidation pattern. Resolution is still most likely favoring a move to the upside. How high? I mean, who knows? But I think ultimately a breakout would then start making investors a little bit more nervous. I would at least think we go up to this 4.35 level on the 10-year. And remember, every little bit counts. All right. In the last 3 months, the U.S. paid over $250 billion in interest on the U.S. debt. We're now basically on pace to pay $1.2 trillion in interest. So when you have that much debt and interest rates go up even by 0.1%, it is major money. It's the fiscal irresponsibility that has plagued this country for a long time and shows no signs, I repeat, no signs of abating. Okay, so back to the charts we go. Look at the Japanese 10-year. The Japanese 10-year, this is something I highlighted into year end when we were trading just below 2%. It is now continuing to spike higher. This is raising alarm bells with the U.S. and with Japan. There's been comments recently, but remember what I've said. A rising tide lifts all boats. It's part of the reason why you can make the assumption the U.S. 10-year is likely going to go higher as well. Now, why? Well, think about it like this. You have debt to GDP in Japan, 240%. That's horrendous. So again, debt to GDP, 240%. All right, so their yields need to go up. People that are buying debt from Japan are like, we want more. We want higher interest rates to take that risk. Then they say, well, let's look at other countries. Oh, look, the U.S. has 130% debt to GDP. We're going to demand a higher interest rate from them as well to buy their debt. Now, listen, we could just print into oblivion and the Fed could buy all the debt in the U.S. And that might be the end result when things get really messy and we go into this next depression stage, which is probably about 4 years away at this point, in line with the depression of 1929, 1930. But ultimately, if they do that, the problem is all our dollars become worthless. Great for gold, great for silver, maybe for Bitcoin. But again, it's not a feasible solution. There has to be austerity. That's the only way to keep from the real pain coming in. And by the way, a couple things. We're going to get into Delta Airlines earnings. The Delta CEO, so number one, the stock is down about 5% on earnings, and we'll look at that chart in a second. But one thing that struck me is he said that basically the only way they're making money now and doing well and going to grow is because of the K-shaped economy, which is the high-end consumer. He basically said anyone middle to low end, they don't even have the money to travel anymore. It's the high-end consumer that is basically they're catering to, which is why they'll see some growth. Wasn't enough to keep the stock from falling over. If we take a look at the chart here, take a look. Let's go to the 10-minute chart, and you can see again the chart on Delta Airlines is down on the day. It's off of its lows, but still a nice dip. Now we go to the daily chart. We had this nice trend line here, beautiful trend line. But look at the price rally into earnings and now pulling back. My guess is, and this is where I'll be trading it today, as I always try to do, is I give you guys my playbook for the day. If we sell off down to about 63 to 62.75, pivot high, this would be a bounce level. Listen, it may not get down there today, but if it does, I would day trade that level every day of the week based on a vertical flush into former pivot resistance. We broke out. A drop into that should work as technical support. Remember, only a day trade. I have no interest in Delta as a swing trade long. JP Morgan reported earnings, generally very good earnings. Couple comments from Jamie Dimon that I actually agree with. The main one was that he said he thought inflation was going to stay sticky. I think we can all be just common sense people, citizens of the world, whatever you want to call it. Just look at copper, platinum, palladium, silver. All of these assets are going up. Look at live cattle prices. Remember, there was that deal with Brazil that the cattle ranchers here in the U.S. weren't happy. It was supposed to bring down cattle prices or meat prices. Meat prices crashed initially. They're very close to back to all-time highs. All right, prices are going to go up. Listen, wheat, corn, yeah, those are still very much at the base bottom level. But you throw in oil now breaking out, there is trouble on the horizon. The question in my mind is, will we actually see the real numbers or not? And I'm sure some of you guys have your own opinions on that. We'll find out. But again, JPM basically flattish here on the day, slightly positive. Nothing major here. There's no trading levels because the stock's barely moving on earnings. But certainly it was not a robust report. Now, on the bigger time frame daily chart on JPM, if we fall down to this 303 level, $303 level, that would be technical support. If that breaks, that's where the floodgates begin to open. All right, let's jump over to gold and silver. So gold closed above this level yesterday. I said, listen, if gold closes above here, especially if we see confirmation today, it could be on a path to 5,000. Now, I wouldn't call myself a near-term bull. I remain a long-term bull. I still think it's somewhat extended, and I do worry about it being a crowded trade. But listen, the charts are the charts. That's why I follow them. They give me a much better sense of where price is going versus my personal viewpoints, right? So ultimately, we closed above that trend line. Let's see if we confirm today. If we confirm today, then again, you would assume it has the bias. And again, remember, it's all probabilities, but it would be the probabilities would favor a continued move up until we get up to this trend line here, which is right at $5,000. Any sort of break back below this line would invalidate the breakout, right? So remember, breakouts can fail. So just be aware. Yes, probabilities are swinging, especially, and again, we have to see if it confirms today, but probabilities, if it does confirm, swing to the upside. If it by chance falls back down, all of a sudden probabilities, like in a poker hand, when that flip card, that turn comes, they can flip to the other side, and that's what we'll have to monitor. So just monitor this trend line. Silver continues to roar. Holy cow. What a move on silver, folks. It closed above. I said if it closes above, it could be headed up towards that $100 level, although that was assuming it would take a little bit of time, like till the end of January. If it gets there sooner, it's going to run into resistance sooner. The trend line currently is around $90 to $92 here. If it were to go up in the next couple days, we're already above 88 per ounce on silver. What a move, guys. Another almost 4% today. There is no stop in this train, basically, at this point until we see a reversal signal. And again, I'll be watching for that, and I'll tell you guys, people aren't happy when I call those out, but you got to monitor them. That's what a technician does, always waiting to see what the next piece of the puzzle does to the probabilities of the trade. All right, couple others here. Oil continues to break out. It's only up about 0.75% today, but we just talked about CPI. All right, now CPI, when this reading was taken, remember the numbers we got today were from December. In December, oil was down here. It was around $56 a barrel. It's already above 60. So we're talking about already a 5-6% move to the upside on oil. That should be, again, I say should be, reflected in the January CPI that we get in February. We'll see if it is. Let's see where, well, and in all fairness, we need to see where oil ends at the end of January. But if oil ends at 62, 63, 64, which I think it could by the end of this month, then it really should spike CPI coming into the next month. And then the one thing I say again is, where is copper in the CPI? The price, I mean, think about it. Data centers use copper. Cars have copper, obviously. Aluminum prices are skyrocketing. That's a huge input cost for cars and vehicles, right? And then you look at, obviously, home building and all those things in relation. All copper, aluminum, nickel, all of these things. And I haven't really shown you guys some of these charts, but let's look at the nickel chart here. Look at the run on nickel recently. Look at this. Incredible move on nickel. Look at aluminum. Okay, let's look at that right there. Look at the run, the bull run on. I mean, look at where aluminum was in April of last year. It's up basically 50%. 50%. And aluminum, folks, you may not think, oh, well, what do I buy? Aluminum foil? Like, well, no, but think about everything you buy that's metal is basically these days aluminum, right? Majority of it is aluminum, especially cars. But again, the costs up 50%. All right, we can even go, I didn't mention this, but let's even go to live cattle. What the heck? Let's take a look here. Let's go here, live cattle. So here was the collapse on cattle prices when the deal with Brazil was done. Look at that drop. And then look, we're now very close. I mean, again, you had this drop of, 17, 18%. And now from those previous highs before that deal was done, we're only down 5%. We've rallied all the way back. In fact, just since November, late November, we're up 15% on cattle prices. So again, listen, and like I said, if not every single commodity, grains specifically, take a look at, for instance, corn. If we look at corn is relatively, it's off of its lows, but it's down decently, right? It's somewhat under pressure here. But my point again is that ultimately, majority of commodities, especially anything metal related, has had a massive move. All right, back to the charts we go. Let's look at natural gas. Nat gas, again, bounced yesterday. It is up a little bit today, but it's off of its lows. But I love how this trend line here, we flushed it, but notice it never confirmed. And what did they do? They rallied it right back. So anyone who kind of got wiped out here on this break, they just took it right back up. Classic reason why the confirmation signal is of the utmost importance here. All right, guys. So listen, it's a day where we are now entering earnings season. Today officially kicks off earnings season. JPM was the kicker here. We'll see Bank of America earnings. We'll see BlackRock tomorrow. Lots of those bank earnings tomorrow morning. But ultimately, what I'm looking for is on Thursday morning. Thursday morning, I want to see what Taiwan Semi reports. That's going to be major. It's going to be good. There's no doubt about it. The question is, has the stock already made its move and has it topped out, right? If we look at Taiwan Semi and we bring up the chart here, here's Taiwan Semi. Now, yeah, it could go up a little bit, but I have a major resistance level around 340, 339 right here. We'll be watching that on Thursday morning. And then obviously next week we get Netflix, we get a bunch of these other ones. Let's keep an eye on the other factors as well. All right, what else is going to rip this market or bring it down? We'll find out. I'll be watching the charts for you. You guys have a great rest of your day. Thanks so much for tuning into my trading game plan. Now let's go trade and make some money. Have a great one, guys. Take care.